Good morning, everybody, and welcome to What's Hot on the Open here, taking a look at MarketStream.live. We're going to take a look at everything that is going on this June 28th, 2017 on in the markets. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock. And after the tumultuous move in tech yesterday, which basically dragged down the whole entire market, we have a market that's firming up today. But volatility, though, pulling back off of its best levels, but now fighting to stay up. Right now down 30 cents, but above that 1050, above that single digit level of 9. With that being said, we still though have very low historic volatility. So bottom line is that the implieds are still cheap. That tells you that there's not a huge forecast of big violent moves at this juncture, but it doesn't mean it can't happen. Speaking of that, let's take a look at the markets. Dow Jones up 100, and it bounced off of its a 20-day moving average where it settled last night, and we have a nice little move to the upside. Financials are really going to be the driver today. The financials have been moving to the upside quite briskly today, but we're not seeing a similar move in tech, even though it's firmed up a little bit. We'll talk about that in a minute. Taking a look at the S&P 500, up 11. Again, coming off of a break of the 20-day moving averages. So it did have the short-term bulls on their heels. It's holding right at that level at 2,429. So watch that level very closely. A break below there means that the short-term bulls could be under some pressure, but we'll have to wait and see. And the NASDAQ has been just right at its 50-day moving average where it's settled. This has the intermediate term and the short-term bulls are on their butts right now. Anyone that's been getting in the last 20 or so days, especially after the bigger pullback that you see back here, they are on their heels, if not out of the market. We're now going to see if the institutions start to look to maybe trim some profits, especially as we get towards the tail end of this month. We only have a couple more trading days, and we're going to an extended holiday. With the July 4th, we only have a half day on Monday, and Tuesday is closed. So with that being said, tech is trying to battle back, but right at its 50-day moving average at on the NASDAQ 100 at 56.75, trading at 56.81, up 9 points coming off of its worst levels. There was a slight break this morning. The Russell 2000 bounced off of its 20-day moving average. That is support right now at 14.05 on the Russell 2000. What's notable here is that the markets have been moving in a choppy action. Obviously, we still have the healthcare bill that's going to be pushed into at least next week. Also, keep an eye on what's going on here in my home state, Illinois. Illinois at this juncture for the third consecutive year is most likely not going to have a budget. That is going to have huge ramifications in the municipal bond markets. Why? Well, the state of Illinois will go into junk status if we do not have some sort of budget in the next 2 to 3 days. It doesn't seem like that's going to happen. They'll probably come up with some stopgap. Now, Congress will not allow the state to go into bankruptcy, but once these bonds go, if they do go to junk status, that's going to have ramifications for large pension funds that are holding debt, specifically Illinois debt, and meaning that once they go to junk, they're going to have to dump this stuff. This could have some ripple effects here, and I don't think it's nationally something that had been discussed enough. But the Russell 2000, watch that very closely. Not that it's going to have huge ramifications, but it could start to set some waves or ripples. What has been moving to the upside, again, is crude. Crude is holding firm at that 44 level. Again, I have said this for weeks, months. I've had too many public appearances where I've felt that this is more of the sweet spot, this $44 level. We'll watch the EIA report, though. That could move this market today. It's coming out at 10:30 Eastern time, so it's after we talk. But right now, crude is up 48 cents. In full disclosure, my clients do have some exposure to the oil and oil services market at this juncture. Taking a look at the non-ferrous metal copper. Copper is one that I use to give me a tempo, a pulse, a temperature of what's going on in the infrastructure type space, materials, right? I want to watch what's going on in housing. We have pending housing data that's coming out. You saw increased prices in UK. You continue to see property markets in Hong Kong that are mixed. And here in the States, again, we're going to watch. KBH Homes just came out. They're positive. They're looking like they're going to continue to build. Copper's been moving to the upside in advance of all of these numbers. You've seen that it bounced about a week ago, up, sliced through, and then came off of the 20 and 50-day moving average. Copper's moving to the upside, folks, at 265. This is right where its resistance came in a few weeks ago, earlier in June. Let's see if it gets some momentum to the upside. What's not getting momentum to the upside is bonds. Full disclosure, my clients do have exposure to the bond markets. TLT is moving down 85 cents again. You can see that bonds continue to sell off in the price action. TLT is the hybrid between the 10-year and the 30-year bond. They call it the hybrid 20-year. Basically, it just tracks the prices of bonds, not the yields, the prices. So when prices go down, yields go up. Now, we're seeing that the bonds continue to fall off, not only here in the States, but globally. ECB President Draghi came out a couple days ago with some hawkish statements saying that they felt that the low inflation rate right now is something that's a blip in the radar. It's not real, that they are sticking with their inflation forecast. They also believe there's a lot of growth opportunity in Europe. So with that being said, global bond markets just started to peel off with those discussions. Taking a look at the 2-year down, basically flat, 10 years down 0.3%, and the 30 years down the most. It's down 0.8%. Now, what's interesting though is that we're starting to see these major bond indices start to challenge 20 and 50-day moving averages. This is very interesting action. We want to watch this price action in the bonds, because if this bond move is for real and it starts pulling back, that money is going to have to start working, and it could work not necessarily in the U.S. markets, in the domestic markets per se, especially we don't have clarity on policy. We're looking at GDP at 2%. Look for areas where you're seeing growth opportunity. That could be in Europe, and there's been a lot of institutional movement over there over the last 6 to 7 months. Asia is going to be interesting too. These are not diversified markets, folks. You look at this, these are growth markets, markets that have probably been underperforming the performance that we've seen here in the States. So that's where you're going to go. If you're looking for true diversification, you're going to look at the likes of like a copper or a crude or a commodity of that nature, and not a foreign stock like Merck, Bayer, Volkswagen, Daimler, and alike, just to name a couple of European things, because that's on the top of my mind. All right, folks, so we have a lot of action going on today. You see that the markets are holding up quite nicely, except for the NASDAQ, and the NASDAQ now is actually moving up very nicely. Bonds are peeling off. VIX is peeling off. There's not a lot of fear. Bonds are peeling off. Money's going to start to potentially work in other areas like equity, so we're going to watch that action very closely today. And I'll be back at 1:30 Eastern Time. I'm going to be talking about a strategy that can help you generate some income. All right, folks, we'll see you at 1:30 Eastern Time on MarketStream.live.